Ladies and gentlemen of the crypto space, we're live on a Thursday, January 11th at 11:34 a.m. Title of the stream is Buy Our Bags because that's what they're going to do. At this point, though, are we at a premium or are we at a discount? Obviously, we're going to look at the data. We're going to see what the averages are, the time-weighted average price, and we'll see where we are relative to where we're probably going to be in the short to midterm. I certainly, based on history and the way these markets move, expect retrace, especially given the candle this morning. Let's take a look at the data. We're just going to jump right in and tell you where we are. Bitcoin ripped this morning, predictably, by the news, by the event apparently, but was it? The volatility is there. It was by the event this morning, and it sold off very nicely in the afternoon. 49,000 Bitcoin got up to. It's trading at 46,000 with a pretty nice shooting star on the daily. There is all the reason in the world to expect a retrace. We are way past the time-weighted average price on at least the 1 hour. 4 hour we're marginally below, but it looks like you're bouncing off the 100 SMA as well on the 1 hour. On the 4 hour, we are below the time-weighted average price. 3 hours left for a 4-hour candle close. We'll see if we hold it as support. If we don't, I like longer time frames. If we don't, we're heading towards 44,000. And there we go out to a weekly chart where the time-weighted average price is down at 38,000. So this doesn't mean much for folks that have been in this market since 2022. Dare we say folks that have been in this market since 2016, 2017? Then again, you could have bought Bitcoin at, well, then the top, it's 20,000. So 20,000 to 46,000, you have a lot of downward price action to experience, and you're still in the green. That's the whole point of being super duper early for an asset that tracks systemic liquidity. And we're not going to get too much into macroeconomics at this point. We know where things are probably going to head in 2024, and we've talked about that to where we have been blue in the gills. Right about now, we're seeing all of that manifest itself in the price action in these markets. I look forward to seeing the volatility get a nice retrace to 38,000, which is unexpected in my general sentiment, general opinion. 44,000 makes perfect sense. We're at 46. You see a wick below and a close above. You see it down at 43, 42. Not even 42. High 42s. Maybe even a 50 SMA retrace on the daily. 42,318 and a capitulation to hold above time-weighted average price as support. These would be interesting candles. So we inspect where we are, considering the candles that print. And this kind of candle usually indicates some sort of potential topping pattern. We look for confluence in the follow-up candles. We need to see the next candle close above the close of this candle. 7 hours left on this daily candle. Give us an indicator of short-term trajectory. Ethereum has been outperforming Bitcoin over the last couple of days. ETH BTC up nicely. Bitcoin dominance down marginally. See, here's the complexity with short-term analysis, and that it'll drive folks mad. On the daily, you just see a bunch of volatility. But if you zoom out to the monthly, this is potential situation for a topping pattern, which is very consistent with what occurred in 2021. Breach above the 50 SMA on the monthly, runs out of steam. And it's not that Bitcoin is necessarily running out of steam with regard to appreciation, it's that everything else is starting to appreciate as well. And the potential for everything else to appreciate is significant, considering they're such smaller capitalized products. Zoom out to the 3-month. This is very consistent with what I see on the monthly. We're above the time-weighted average price, and I don't expect it to hold to the upside for too long. I don't expect altcoin capitulation as compared to Bitcoin capitulation. If you see a broad capitulation across the markets, that would make sense. But I don't see one capitulating and the other not. Personally, I favor the Ethereum price action as compared to Bitcoin. Bitcoin is very interesting from an ETF perspective, particularly in a retirement account. I reallocated part of my Roth IRA towards Bitcoin. Will serve me much better as compared to other items that were in that account for a long time. And it's what else am I going to put in that fucking account? I've been screaming to high heavens that the real economy is decimated. It looks horrible. There is no solution to the real estate complexities in the short term, and these rates are going to change the entire structure of the market. The real economy is what's on my mind as capitulating, which we've seen in good part. I don't know where the money is going to come from to prop up the real economy, but what I know is this financial economy is one microscopic compared to the amount of capital in the real economy. So even marginal flows to this emerging market have the capacity to cause significant price appreciation. And the most interesting thing is that those marginal flows don't have to come from the United States, they come from the world. So the potential for marginal flows of the amount of capital in the real economy is monumental. It's huge. So it's not the macro cap, Bitcoin, Ethereum that interests me most. It's really the enterprise in this emerging market. I think that is the most potential to restructure a person's portfolio going forward. Obviously, altcoins are doing extremely well. Phantom was significantly outperforming yesterday. Stacks ecosystem has a lot of hot air has come out of it. Alex is coming down. Do we really have to go back to narratives about the functionality of these systems? I don't think we have to go that far to the base of how we inspect these systems. But clearly that rotation is occurring. Same with some parts of the Cosmos ecosystem, albeit TNC are retaining a lot of their price appreciation that they've experienced of late. But the things that are most interesting that haven't received the vast majority of appreciation in the last months are the actual businesses. The right curve type shit that you actually have to understand how these businesses operate to understand why capital will flow into them. Most of the price action we've seen in the altcoin space has been gas tokens. So that's clearly left curve territory where it doesn't make any sense other than price go up, people FOMO buy, and then price retreats, and you have the rotation of the hot ball of money. So we've seen some nice bottoming patterns across the board on cash flow assets. Curve does not want to print lower lows. Doesn't look like it's getting towards the 39 cent. Doesn't look like it's getting towards the 40 cent. This is the 3-month candles, which are starting to get interesting. Zooming in on the monthly, you can see how constructive it is. Higher lows month after month, finding resistance to the upside. Still, it's at a discount. It hasn't breached the time-weighted average price to the upside at all yet. It has interacted with it more or less twice, rejected twice, so it has yet to receive capital inflows. Everything in the space is going to receive capital inflows. It's just what it is. It's just the order in which they receive capital inflows. Frax got a boost from USDC announcing their IPO. Good to see. Polkadot outperforming still at a significant premium. Bit of a hanging man. This will take a couple of months to resolve. Nicely above the time-weighted average price. Fair amount of activity and things going on in the Polkadot ecosystem. It is far behind in the order of expected appreciation. I would say Polkadot is behind Cosmos network of networks. Atom, strength as well, barely broken out. Bit of a premium, obviously. monthly time weighted average price is basically the premium discount region. Osmo has just completely recaptured a lot of lost capital in the bear market, up hundreds and hundreds of percent as well. Osmos and Atom and all that falling into the Say and Celestia and Sui and whatever the hell else is going on Cosmos hubs that has captured a lot of attention of late. And all of it is at a significant premium. Just because it's at a premium doesn't mean it's coming down to a discount anytime soon. But that also implies a relative degree of risk. What is the discounted price in the future? Which is interesting from a Bitcoin perspective. Bitcoin's at a significant premium. Significant premium. And comparing back to 2019, 2018, 2019, you really can. And heading into Q4 2019, Q1 2020 was quite extraordinary, quite an extraordinary time. Never really got back to, I don't expect those sequences of events to occur again necessarily. But history rhymes. That whole doesn't repeat montage. Notice the bottom was a little bit below all-time highs in 18, which is interesting. So you have your blow off top to wherever the hell it heads this cycle. And you can expect capitulation down to a long-term average price, 50, 60,000. So that's why it's important to understand that amount of risk. If you buy it at 44 and the blow off top is $250,000 and then it crashes to 55, 58, nice line, that's a hell of a chart. It's a hell of a pattern and it looks really good. And over the next couple of months, we'll see where the time weighted average price trends. And it's pretty clear where it's trending. We pull out our drawing indicator and just literally draw it on this trajectory. All right. I mean, how many candles in that? That's got to be almost 8 months. So, things get really frothy. And boop, right into a time weighted average price, which levels off. Kind of looks like a decent chart right there. Clearly, that's just off the cuff, napkin drawing interpretation, but that would make sense. You're late. There's nothing wrong with being late. It just is imperative to appreciate what that means from an expectation standpoint. In a year and a half, 2 years from now, if you see Bitcoin at $51,000, $2,000, $3,000, $4,000, $5,000, that's pretty cool. It means you have to play it really from an FX perspective. You could get easily a couple of multiples on Bitcoin from here, 1, 2, 3 multiples. But you got to swap out, otherwise you're going to lose all that appreciation, considering how late folks are. It's down at 15,000. It's 3x from bottom. That's pretty interesting, because look at this chart on the monthly. You're inspecting from 2023, and we're peering into mid-2025, heading into 2026. Monthly candles give you a hell of a perspective, no? Similar thing is expected from Ethereum, in my opinion. Get that crazy blow off. Crazy blow off, the appreciation would be much more pronounced from an Ethereum perspective. I mean, look at the delta. Look at these moves. 5x, 6, 7x, 8x, 10x. Well, these are not even remotely accurate numbers, but a $20,000 blow off top and it retraces to $4,000. Okay. In historic terms and historic volatility terms, these numbers would make sense, which means, just like we were saying with Bitcoin, you're late. And that's interesting. And in this regard, here's your time weighted average price. It trends upward and then it flatlines for a year. Stuff like that. Hope that helps. Solana is probably going to tread water from here, in my opinion, especially as Bitcoin and Ethereum catch a bid. But that's obviously going up over time, especially as the businesses on the network start to better establish themselves. In my opinion, that is how I play Solana. I don't want SOL. I want the beta on SOL. I want the beta that gets repriced 1,000x on the money and not just 10x from here. If SOL goes 10x from here and hits $1,000, that's crazy because it was less than $10. So that's 100x on the money. So SOL ripped 100x on the money, and now you're in at $100 and you're literally at getting a 10x out of something that ran 100x for the cycle. So that's just not something I'm interested in structurally. There's no reason, especially when you could just nail Ethereum for a couple of multiples and then just buy Solana at the bottom of the cycle, knowing that it has proven itself to be something that operates cyclically and it participates in the ecosystem, much like we've seen Bitcoin and Ethereum primarily operate over the last couple of years. And it looks like this is expanding, which means it's not just Bitcoin, Ethereum, Solana, the Cosmos hubs, AVAX, Phantom. There's a lot more networks that are going to be participating cyclically. And that cyclicality will likely be in an order, considering where they are in their adoption. It's such a loaded word, but that phase, that sequence will likely persist over these cycles. And the odds are, as history tells us, the odds of one overcoming another is like the odds of something on Cosmos gaining attention and activity greater than that of Solana are pretty slim. Because things that occur tend to keep occurring. Momentum, and that lendiness builds and that trust builds. And that's just the nature of economics and the nature of humanity, for that matter. Things in the lead stay in the lead, so the order is maintained. Phantom probably has some of the greatest potential for reappreciation, considering their network upgrade and the capacity of the network and the fact that it was a pretty interesting experience in 2020 and 2021 from an EVM L1 perspective. And it has a fair amount of protocols already deployed, hanging over through the bear market in 2022 and 23. So there's already a lot of infrastructure over there. Therefore, when capital is interested in getting sticky, there's a good chance Phantom retains a fair amount of that capital. Like, for instance, Phantom has much greater potential to run multiples from here as compared to Solana, which has already run 10x on the money. Food for thought. Food for thought. Astar retaining a fair amount of its appreciation. I have eyes on Sora. Sora is an interesting history, but PolkaSwap and Polkadot still catch my fancy. Doesn't mean there's no certain opportunity in any regard, but that's the whole point of the small positions. 0.1% to 1%, 0.1% to 10% of a portfolio really changes everything, and that's the type of risk reward you get from assets that are not established. So that's interesting, and that's why I keep it on the watch list. Syscoin not catching a bid too much, looks nice from a price point standpoint, but doesn't have the traction that Stacks had. It certainly doesn't have any infrastructure. There's no reason for capital to be sticky on it. But that's exactly what occurred in 2020 on Ethereum mainnet. It was just wild. Anyway, that's the most important perspective to keep in mind, especially as these markets really start to get hot, and it's not just the exogenous money that'll cause them to get hot, it's the endogenous money that gets printed. I wish there was a way to filter these tables, endogenous versus exogenous. MKUSD endogenous, Frax endogenous, collateralized at some point 100% by not USDC. DAI clearly on-chain collateral and RWA collateral. Liquidity clearly all Ethereum collateral. So, man, Liquidity's been hit hard. Not so easy to manage a peg now, is it? Obviously, CRVUSD, a little less than 100 mil. Most interesting, probably from a curve perspective, of CRV-USD is Arbitrum activity. That's something everyone probably has their eye on. Pretty interesting. Tapsy's in the house. Much a pleasure. Hello, post ETF release market enjoyers. Well, that's certainly the case. Let's see where we are as we talk. Let's clean up the chart. Bitcoin hovering at 46,000. It's up at 49,000. That's wild. Talk about exposing meat space to the volatility of the crypto markets. They even said brokerages are making people sign volatility waivers. But it's surely going to get the attention of everyone. It only took $40,000+ Bitcoin for that to actually occur. Talk about being late relative to any chance of being early. They are late. You think they're getting 10,000x on the money? I mean, literally the entire global financial system is failing if Bitcoin runs 10,000x on the money. Dollar denominated. So I think folks from a meat space perspective and an ETF perspective certainly have to have their expectations set reasonably. Loki, welcome. Sounds a bit clippy, maybe mic too close. We'll see. Checking in from Brazil. Hello, much a pleasure. Much a pleasure. Brazil's doing pretty good economically of late, all those natural resources. Welcome. Good morning, Cap Paul. Not sure if you saw my analogy last stream of ETH versus alts being like gasoline versus diesel. One is more expensive, but to none when it comes to moving heavy cargo. Sure, alts need to be broken down. There's a lot of granularity to inspect them. Gas tokens, alt L1s, that's another story. But enterprise is different because when you're talking about credit protocols, EVM credit protocols, that's completely cross-chain, has nothing to do with Ethereum. When you're involved with something like Curve or Aura, has nothing to do with Ethereum. Albeit Aura is predominantly Ethereum, but Balancer expanded significantly cross-chain, cross-EVM chain. The Curve is obviously on, 8, 9, 10 chains at this point? So it has nothing to do with Ethereum mainnet. So that's an important distinction where you're talking about altcoin protocols, businesses, as compared to particular network gas tokens. Very different. Sergio, present. Asarco, hey Cap. This might be a bit off topic, but I'm not a software guy. How do you think about OPSEC best practices for interaction with DeFi wallets? I still stick with Ledger. You could do a Grid Plus, which is fine. Just use a hardware wallet, not a big deal. I wouldn't use MetaMask nowadays. You just use Frame and a hardware wallet, and you're done. Don't really have to think about it too much. Make sure you use YubiKeys, U2F on all accounts. No SMS 2FA, and you're pretty much done. YubiKeys are the best you're going to get from a security standpoint. That's it. Keep it simple. What would you guess a potential market cap for CRV-USD could be when all pistons start firing? Up, higher lows, higher highs, growth of the market cap, especially when endogenous credit creation starts really firing on all cylinders. Right now, this is all external flows. That is microscopic external flows. I mean, during the bear, Ethereum got down to what? 68? $67 billion, so $1.5 billion worth of liquidity came on chain. Some of it was printed as endogenously, but it's not like 150, 200, 300 billion where there's 100 billion endogenous liabilities that were printed on chain. So that we're not there yet. We don't have that bubble. That's by definition a bubble when you have the credit expansion and the contraction. So we'll certainly have eyes on that as this market unfolds. Once the leverage picks up, the risk is on the table for the bubble to pop. exogenous flows into these markets isn't necessarily a bubble, but there's risk for those exogenous flows with regard to forced selling and meat space, credit stability, and the events that would cause people with on-chain assets to be forced to sell them, to transfer that capital to fix messes that they've created outside the crypto markets. Nice exogenous flows into these markets thus far, but the real fun begins when you have everyone like, oh, I could borrow, I could collateralize, I could print dollars using credit, accessing equity. And we're not even close to those types of market conditions. So we're still early in that regard. I just like to keep the perspective in mind, early, late. We're early with regard to complete exuberance and the formation of an endogenous credit bubble, but we're late with regard to external capital flows that have caused Bitcoin to appreciate from 16,000 to 46,000. So the expectation must be that at a full capitulation from wherever all-time high lands, probably not going to be much higher than where we are now. That'd be a full retrace back to all-time high of last cycle. Blow up to 250, you crash to 65. Seems crazy from an external actor perspective, but that's what we've seen, and that's the type of volatility that is probably reasonable, which means if you're getting at 45, you're early relative to the bottom of where next cycle may land, but you're certainly late relative to the bottom of where last cycle landed. Really need the 3 month to gain that perspective. Capitulation to the downside. In the 25 and the Q4 2025, look at the trajectory of the time weighted average price. I mean, literally, that's just a bad linear extrapolation. That puts you at 52. That's just linear from where we are. So you go parabolic a little bit. And you land at 58. I don't know. This is just horrible, but it's kind of hopefully expressing the point. So you land at 58. This is 2026. Just broad strokes of the type of volatility to expect and where you are with regard to being early and being late. Price range where we are. I mean, frankly, if in 2026 the Bitcoin bubble pops and the bottom is 34% higher than where you are right now, 34% gains is impressive to say the least. So this is why you have to set your expectations as reasonable. Can make all the difference. Thoughts on something like OTC, P2P exchange with auto rev share, eliminate slippage, price impact, offload smaller tokens for a price you set. Every investment, every business reduces to the same exact thing. How much does it cost? How much is it paying you? And how likely is it to continue paying you in the future? So in that regard, heading into the next cycle, it's the trust. It's all about which protocol people trust the most to deploy the most capital, and then more and more people are experiencing that kind of stability that has been achieved through years and years of hard work, development, and iteration, and that's where the capital will flow. Capital flows to where there's the least risk and the most trust. So anything that's brand new is going to receive less capital. So your principal may appreciate in a more volatile way, but if it's printed 20, 30%, okay, there's plenty of things printed 20, 30%. What's the difference between one asset printing 20%, another asset printing 20%, and another asset printing 20%? Nothing. They're all printing 20%. It's the common denominator of all investments. Cash flow, the dividend. What's it paying you? So if it's paying you the same, all of them, the most important factor is how likely is it that it's going to continue paying you into the future. Tapsy, I'm an artist on the charts. Yeah, this is certainly art right there. Where was the time frame? Was it the weekly? No, I think it was the monthly on Bitcoin dominance. Some folks are not fond of the BTCD because it has stablecoins in the mix, but I think stablecoins are a meaningful expression of a real component of these emerging markets. So this looks very interesting from a reversal standpoint, especially considering the expansion that has been going on of late in the Cosmos ecosystem, which is very refreshing, by the way. I've had Cosmos since 2020, and there was no attention to it whatsoever during the bear market. Everything capitulated to rock bottom, and then all of a sudden, in 2023, Q4 2023, Cosmos got hot because of some airdrops. And heading into 24, it looks like it's going to retain a fair amount of the attention it has received thus far. So that's pretty cool. It's come a long way. And that's interesting to see something that had no attention, that you believed in for years, start to finally get attention. And that's really what's occurring. I mean, Osmo was an airdrop. This was an airdrop to Atom stakers, validator delegates. And even Atom, I mean, back in 2019, 2020, this was $1.25. Osmo launched at a higher price. This thing was up at like 10, 11, $12, and I think it launched at like $3. But clearly from the bottom at 20 cents, this is a heck of a reappreciation of the price. So there actually is systemic importance to this asset. See, I love looking at charts like this on the monthly. It really puts it in perspective of how freaking brand new the asset is, and you have absolutely no idea where things are going to head. It turns out it's the core comfortable place to deploy capital in the Cosmos ecosystem. It's been around the longest, which means it has more real world testing. It's trusted more. Things in the lead remain in the lead as much as Astroport wants to think you could incentivize taking over the lead, which is interesting what they're doing in the tokenomics modification, and it'll garner a fair amount of attention. It doesn't mean it's going to disrupt base layer Uniswap, and Uniswap in this case I'm referring to like an Osmo, the first on the network, the one that has been building the trust the longest. And that's meaningful. DeFi Futurists in the house, much a pleasure. 21 people on the stream, 8 likes on this ETF day. Pretty good, pretty good. Cash flow has been nice. Not much to report there other than cash flow has been very consistent in 2020, Q4 23 heading into Q1 24. Just we have the numbers. Let's take a look at classic UI. Let's see where we are from a base curve cash flow perspective. Haven't looked at this page in a while. If it loads, that's another story. We could also look at this curve monitor. Well, that's not going to give us the best. Maybe home at the bottom we could get the load. 25% crypto volume share. That's pretty good. 282 mil. I think we're back over 2 bill deposits. Yeah, look at that. Base VE curve is cranking out 10%. That's crazy. Very interesting to see. I wish the total deposits would load. Let's see if Curve Monitor gives us a perspective on that. No, gauges, live monitor, pools, no. It's not going to give us what we're looking for. I like this chart as well. It's useful, gives you a good perspective. I think Arbitrum is going to come out swinging, especially as things start to pick up. Let's go over and see where yeah, look at that. Over 2 bill. Big capital inflows, 2.32% week over week. When you see 2% on a relatively small cap ecosystem, it means there's going to be a lot of volatility, and 2%, that's volatility to the upside. So let's see where curve lending comes in. Geez. Llama lending. A little bit of a difference, Llama lending versus pretty much the entire ecosystem of credit thus far in crypto. where you have smooth liquidation versus fixed liquidation or threshold-based liquidation. That kind of changes the equation. That could be a significant amount or a significant source of CRV-USD activity. That's quite interesting. Obviously, the same opinion is still in play with regard to Frax. Frax Chain is coming. A whole host of stories to be told about the potential. And that's exactly why I responded so strongly to the news of USDC's IPO. Credit, liabilities, cash, synthetic dollars. This is very meaningful stuff. Do you think Frax's FPIS could have an interesting future? I think that was a nice little pet project. I'm not too fond of it from a personal standpoint. I think it was cute to tie the peg to CPI. Not quite sure the significance of it, and that the whole point is it's probably best expressed as an experiment. It works reasonably well. I think the peg is off a little bit currently, but that is what it is. It's an experiment. All of this is an experiment. All of this is literally, beta testing. And in the coming years, it will become increasingly established. The amount of capital in these markets is zero. Zero, 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 zero. This is all fringe capital. This is all extra capital for all these relatively large sources of money. It's $2 billion on Arbitrum. It's, from a planetary perspective, it's zero. It's frankly, the same thing for Ethereum mainnet at $69 billion. It might as well be zero. So this is all test net shit. So that's why it'll take some time. This is where my time horizon spidey sense kicks in and says, I look forward to 2027, 8, 30, 31. And that's when you really start to see these types of things appreciated. That's how long it takes, even in meat space, for assets to know whether an asset is going to be established as a business, or it's not going to be able to pay off its debts and VC funding, and it just doesn't become entrenched, and it doesn't work, and you get your bankruptcies. Now, all of that will play out a little bit different in these crypto markets. You don't have a traditional bankruptcy, but you can have continued depreciation. But it takes 4, 8, 10 years to really see what the core actors will be, what becomes really entrenched and significant to these markets. And for me, it's the credit systems concept of a DAO or alternative consensus chains and TPS. So it's all shit that people should be thinking about. People should be thinking about businesses and what businesses are paying, because if they're paying now, they're going to keep paying into the future. DeFi Futurist, I'm so glad that I didn't FOMO. Yeah, that's cool. That's cool. Where are we on Bitcoin? 46. I think I bought it like 46.8, 47, 47.2 in the brokerage account. I don't give a shit about that capital. Because what do I say about 401ks, IRAs, and Roth IRAs? It's not going to fucking do anything with them. Nothing's going to happen. You can put literally $7,000 or something, whatever it is, into a Roth IRA or an IRA, and you're getting nowhere slow. They say if you invest when you're 18, like $7,000 a year, by the time you're 50, 60, you'll have $1 million. You have any idea what $1 million is going to be worth in 30 years? What a waste of time and opportunity, because there is no opportunity. Now there kind of is. I think Bitcoin should be an interesting component of retirement accounts. Strange world we're heading into. Next 30 years are going to be crazy. Probably see significantly different structure of the financial system in many regards. Hey, it may even be some of these components, because these components are becoming time tested. And in 2030, 2035, 2040, some of these components can become significant players on the global financial landscape. And that's what intrigues me the most. It's not the 1 year, not the 2 years, it's the 5 years, the 10-year type of perspective. Cap, do you see we are taking off from now? Well, there's two two parts to that question. Um, do we see it actually taking off, or what does it mean? From a portfolio perspective, and that's why you have to know whether you're buying at a premium or a discount. Um, for that, you have to look at macroeconomics. CPI came in hot today. Bid on energy across the board: natural gas, coal, oil. Um, it's going to be an interesting year, 2024. It's just a Fed guy said something that really sits home with me, that the biggest risk is the crash to the upside. It's a big risk, and you got to really appreciate that, because a crash to the upside means that they've fucked up from a debt issuance standpoint, and they're in like the last throws death spiral type story unfolding, and you'll see your numbers of your portfolio go absolutely sky high, but that all of that leads to systemic instability. You see Bitcoin at $1 million, and shit is fucked up out there. If you if people that don't, that's how people with Bitcoin become targeted, and that's how that kind of social unrest occurs between the folks that are making $15, $20 an hour, that have no assets, no investment, they don't own property, and they're left behind, and how those persons respond to people with assets that are making 10x on the money in a year, turning 100 grand into $1 million in a year, and they're making $15, $20 an hour. So all of this, you got to remember, leads to social unrest. And that's probably where we're heading, more likely than less. This is the only direction they can head from a fiscal perspective. And you'll know if they're going to try and avoid that, because they'll cut the defense spending from 800 billion to 600 billion, and they'll cut Social Security and reduce it 20%. That's what it takes. And if you see that, all right, then maybe it's not the best time to own assets, and they're finally trying to take the froth out of the system, and stop holding up equity prices, asset prices. So those are macroeconomic factors and events that we certainly have to always be prepared and understand what they mean and the implications of them, because it's all a tip of the hand. It's all a tell about what they're doing and why they're doing it. As of right now, 2024 is on track for just a debt orgy. 10.8 trillion plus deficit spending in fiscal 24. And all of that takes money out of the real economy, goes to the TGA, but is a leading indicator of financial liquidity expansion, because that 10.8 trillion plus fiscal deficit spending makes its way into the global financial system, and all of that U.S. debt is used to create dollar liabilities. It's used with leverage to create dollar liabilities. So all in all, between the TGA that gets refilled by all of that, well, not the 10.8, that's refinancing this. So they borrow the money and they use it to pay off the principal on debt outstanding. But all the deficit spending clearly is the TGA getting refilled, and they're spending that into the economy. But all of that paper, fresh on the run, coming out of the Treasury, gets used in the system to expand the global liquidity footprint. We'll see what China does too, because they are in basically a 2008 situation, and all signs look to them printing their way out of it, especially as compared to October 22, where we're off the bottoms with regard to Chinese component of liquidity, and they just are supporting the market significantly. All their real estate, they have all this bad paper. It's worthless. Well, what was it, like 2, 3 homes to every one person in China? That's how many homes they built, or places of residence. They just went crazy, batshit crazy, and then the fraud was through the roof. So they just have had an interesting run. Anywho, uh, while people are going crazy regarding the ETF, there's a lot of excitement this morning, but the second the sales, or the second the the hot air came out at 49,000 and retraced 45.5, it's back up to 45.9. People are like, oh, but what do you expect? You expect a run up like that and it's just to stay up there? No, this is all about dollars still. This is not, run on the dollar in any regard whatsoever. Anytime soon. Dollar's established and it's still very strong. So it's not going anywhere. Don't forget that. Please explain exactly what the TWAP is and how it differs from moving averages, time-weighted average price. So it's just a measure of an average price. So these, for instance, this is a 100. So these are 100 ticks on the monthly, and this is the average of those price points. This is a 50. This is a 10, the green on the back here. And this is the time-weighted average price. So it's the average price over time. It's just an average, and this is an indicator, and this particular indicator can vary, and other people could create different indicators. There's volume-weighted average prices, and I just like it because, to me, this indicator kind of feels like the average of the averages. It's the average that peers through all the bullshit to the most, in my opinion and in my experience, and it just gives me a sense of comfort understanding where we are with regard to directionality, premium discount, and price activity pressures, so on and so forth. So look, everyone loves like the 21-day moving averages, or I don't know, stuff like that. Everyone has their preferred technical indicator to tell them where they are in the market. Well, folks love the MACD. Folks love RSI, Stochk RSI. I just like to keep it simple at this point, and I like the time-weighted average price. Clearly, the time-weighted average price is going to be different on different time horizons, and that tells me really what I want to know. And it's all relative, meaning, look, discount below the time-weighted average price, premium, discount, premium. You're going to get a discount at some point. Probably not going to get a discount back to the time-weighted average price until we blast through at least all-time high. And now there's a probability for that occurring. Does it occur? Okay. If it doesn't occur, there was a probability that it doesn't occur. So that's how you measure the market. So the biggest thing that gives me comfort in the market is thinking relative to our lows. Our lows at 16 or our lows at 39 or 32, which was set in October of 20. 39 in October of 22. July of 23, 38. Do you know what it takes to get down to those lows? It's like you're talking about fresh lower lows is like invalidation of the narrative. Who's the forced seller? And that introduces complexity with regard to curve and the market activity with regard to debt and collateralization. That's interesting. But clearly it's very different for each asset. Each asset has a different narrative that would be required to push it into those fresh lower lows. And I don't see fresh lower lows at this point. So that's what brings me the most comfort. But which also means you had a significant premium compared to the lows. If you look at Bitcoin, you are literally up hundreds of percent. So there is a probability somewhere in this universe Bitcoin corrects 50% from here and it's at 28,000. And that would be literally the time-weighted average price on the monthly. Just saying. There's a possibility. Hope that helps, Nick Bond. DeFi futurist social credit is coming and universal income is here. Finland already operating it. That will solve the social needs. Not necessarily. It's complicated in China. And that's complicated because then you have trust. And there's a lot of population that doesn't trust that kind of system, and they don't want that kind of centralized management of how much people could spend and can they save at all. It's just everything becomes a controlled environment, and that's not necessarily, the principles of, especially the United States, freedom of life lived, pursuit of happiness, and all that bullshit, where people can outperform another person if they have the capacity to do so. They can acquire more resources than someone else if they have the capacity to do so. And that's not the way it works in a UBI socialist regime. Complicated, complicated. But I appreciate that as an observation of a lot of things that are being pushed. We see it everywhere. Can you check out Ethereum, please? 25.9. We saw it briefly at 26.5 earlier. Ethereum is outperforming Bitcoin meaningfully, 1.7% to the upside on the spread. Clearly, the only reason the Bitcoin ETF went in my Roth is because that's the ETF that's available. Spot ETF. So that's cool. Do I expect it to outperform Ethereum? No. You're going to get a greater, in an appreciative environment, Ethereum will appreciate more than Bitcoin because it's a smaller market cap. So the same amount of dollars in the hot bowl of money that rotates from Bitcoin appreciation, all those gains rotated to Ethereum, will cause more appreciation on Ethereum, smaller market cap. So there's in no world does Bitcoin outperform Ethereum going forward until the market caps are comparable. And even then, the narratives are different. So there's plenty of reason for a divergence between their path. Hope that helps. Is it too late to get Frax? Well, its lows were in 2021 at $1.50, and we are sitting on 532% returns. That's from 21. 140% returns from 22. It's at a premium on the monthly time weighted average price. You're going to have significantly less potential returns as compared to someone that had 3. If you, it's 100% more returns. It's double the amount of returns. If Frax goes 10x from here, the person that bought at 5 experiences double that, 20x returns. That's the difference between 100% at the bottom versus where you land at the top. Frax is a relatively new asset, so you can't really go out to the 3-month. But on the monthly, it gives you a decent perspective of where you are with regard to premium and discount. It's at a premium. Does it mean you get a discount? No. Does it mean it gets crazy and then it crashes to 22? Sure. It sounds very reasonable for a potential path trajectory. Hope that helps. Great, but happy to be here every time FXS pumps, the market dumps. Frax holding on to 8.2%. It was up 20% this morning. It's not like the market's really dumping. This isn't really a correction. It's just people taking profits. You'll never have a market on this planet that doesn't have this PvP profit taking. It's a shame. It's inherent in humanity, really. But overall, I think the market looks very interesting, probably even from a daily and a weekly perspective, which is not something I really inspect too often. From a Bitcoin perspective on the daily, you still could come down to 44, and that'd be a mean regression. So this is higher lows, higher highs across the board. Back in August of 23, you'd have to go out to the weekly to get a perspective. August. Deviation to the downside, time weighted average price, attempted invalidation, failed, and pushed right back up. And that's the kind of volatility everyone needs to expect. which means you're buying these things thinking years into the future. You have to zoom out and have a much longer time horizon. And to such a degree, the way I engage with the market isn't even about really principal appreciation. I have general rules. The most important thing that I keep in mind nowadays is set completely complete downside expectation, and that becomes my base case. Like if I get 5x on a curve from here, it's not even going to be all-time high, but that's literally like what I'm looking for. 5x there, revenues remain 20-25% on a 5x principal appreciation. And for me, that is wild. 5x seems pretty short of where things can likely head if things get as crazy as they did in 2020 and 2021. So if that's my expectation, it's kind of like in programming or development world where it's under report, over deliver. Tell them it's going to take 2 weeks and get it done in a week. Uh, Things turn out well. So if my base case is a 5x and ends up doing 20x, all right. But then I'm not disappointed. So set those expectations reasonably, and you will find yourself more satisfied with where the market ends up. It's just the concept of being realistic with oneself. Do you see Sol ETF incoming cap? For what? The volatility in trading, and the amount of volatility in Sol is extraordinary. No, I don't. I wouldn't be interested in it either. I don't think they could sell it merely because of the volatility. That also implies we're not going to see, because of passive flows, maybe a 90% retrace in the Bitcoin price. We'll start to finally see muted retraces over the years. 50% retrace, 60, 70. Not going to get the 95s anymore out of Bitcoin. So the market structure is different in meat space. Flows, passive flows, dumb money just keeps flowing in no matter what, and that supports the price action. But Solana is not at that point. If anything, Ethereum is next, and Solana has been much more critically received from a security standpoint, and all of that shit is still on the table. All of that shit is still very complicated, and everyone wants to preserve their control. That's clearly the motivation for all of those actors in regulatory positions. Literally everything the regulators say is the antithesis of what comes out of the majority of the congressional and House committees. The House committees are yelling at the SEC. So it's quite interesting to see all these different actors in our government with contradictory, a lot with contrarian opinions. And even on the SEC, the committee, Hester Pierce has very contrarian opinions. Very interesting. I look forward to the coming years. Sol got new capitals from Chinese investors in Wall Street. Not surprised. Sol sitting at 99. Have exposure, but the only exposure to Sol. Sol at $5 is a different kind of exposure. It's 20x from $5. So you turn $1 million into $20 million. So late relative to where you set expectations. In my opinion, the only way to capitalize on Sol is to sell it or become a validator. And for 4 or 5% of the money, was it 10%? I think it's 10%. The validator's return. You need a large portfolio. You need twice the size of the portfolio that I have, with my expectation being 20-25% returns. In any regard, the principal appreciation with Solana beta businesses on the network, of which there's basically none established. We know the names. We know the whole narrative of the Federation, and that's meaningful. and that gives us our likely beta candidate. Sol moves and capital flows in to an attractive trading venue or credit operation. Cash flow is going to be there from the beta assets. That's the deal. Sal, co-founder, has good connection with the Chinese investors. Yep. I don't expect anything less from Solana at this point, especially after a run it just had in retaining 99. It's a hell of a number from a capital stickiness standpoint. It's establishing itself as something that is capable of receiving this kind of capital inflow. Solid 99 means more capital is being deployed to protocols. More work is being spent on protocols so they could turn them into businesses. It's becoming established. And then you're asking yourself, what's next? It's probably one of the damn Cosmos chains, of which there's a billion of them. It could be, I don't know. Could be anything. But they usually stay in order as the cycles play out. Solana, one of the Cosmos hubs, Polkadot will catch up. It's probably lagging behind Solana Cosmos ecosystem. Wonder where Flare is. That whole damn XRP airdrop. Flare was hot. That's kind of at the wayside. I'm curious what happens with Cardano over the coming years. That's further down the list. That's probably... I don't know where it is relative to Polkadot. Maybe it's certainly after Cosmos hubs. But is it behind Polkadot? I mean, it's there. It's not going away, and it's a network, and it has a capacity to execute compute. So it's there. But it's way down the totem pole in it gaining critical attention from a business standpoint. That's always just speculative experimentation shit. What do I mean from a speculative experimentation shit? There's literally protocols of businesses that have gained probably a critical threshold of trust on Ethereum mainnet to be used by meat space business enterprise. That's the relative comparison. I mean, you could probably use Aave in business. It's probably that established at this point. Compound. So that's it. And that's literally the whole premise for what we're doing here. It's not so you could be degenerate and borrow capital and invest in some shit because PvP says capital's flowing into some Cosmos chain. That means nothing. We could capitalize on that, but that doesn't mean anything. So what is the meaningful parts to these systems? And it's literally what I just described to you. What company on the planet is going to say Aave is offering a good credit opportunity as compared to some shit that a bank is offering them? And I feel literally like an XRP community member talking about real world use cases and all the CBDCs that are going to operate on XRPL. Interesting. Have missed on the previous stream since last bribe period. Well, market's pretty good, and it's Thursday. It's payday. Pretty cool. Cosmos is complicated. Yeah, not too complicated from an osmosis perspective. Osmosis is great. This is a chain. This is an entire blockchain. This is an entire blockchain, osmosis. This is an entire blockchain. This is an entire blockchain. They're all entire blockchains. Also, milk tea, there's derivatives in here, but these are almost all entire blockchains. That's what's crazy. And then you go over to assets, and you're like, I don't have any Atom to show you. You can withdraw it to. So it's kind of like a deposit. What does that mean? That's the way they frame this user interface. So I'm withdrawing from Osmosis, which is an entire blockchain, back to the Atom back to literally Cosmos Hub onto the Atom blockchain. So it's turning blockchains into destinations for deposits. That's basically what that means. And then you're in your Kepler wallet, and it's just you have these assets that are on different chains, and you can move them from one chain to another basically seamlessly. It's seamless cross-chain. And that's what caught my eye when IBC came out. I was like, yeah, this is going to be hot. And that it turns out it's pretty damn hot to be able to transfer any asset to any chain, and it's all managed by the IBC protocol, which is really, really cool. This is a new feature where you can stake directly on this user interface. Otherwise, you got to go to like Cosmos Station and do things through wallet managers and stuff. So this is how early you are. So to stake Cosmos, you didn't do it to stake Osmosis. You didn't do it through the Osmosis portal. You literally had to do it basically through a blockchain administration panel. But this changes the capacity for the average actor to be like, all right, how much is this paying? 12%. Interesting. Draws in capital. And that's exactly what we see from an appreciation standpoint. That's a heck of a chart right there. Price range. Sitting at 800, 750%, give or take. Interesting. What are your thoughts on PayPal adding bribe to the Frax? That's as big as it gets. I wonder if that was PYUSD that was a bribe and that was actually external PYUSD capital. I think that was the case. If anything, if that's the case, that's massive. I've had Frax since it was launched, so I've talked about it till I'm blue in the face. And what's imperative is exactly what DeFi Futurists just said. Very hard to navigate without technical skills. You will not know if you're buying at a premium or a discount without technical skills. It is imperative for your financial success to acquire these skills. Now, these skills are not just reading. It takes time because in order to interpret these charts, you need to have a second sense. And that second sense is only acquired over time. These charts tell you the average sentiment in the market. These charts tell you where we are in the market. That's why I've reduced talking about where we are in the market in terms of premium and discount. Regarding Cosmos IBC, who is in control of the whole thing, code or humans? Code. The validators certainly don't have the degree of decentralization as compared to Ethereum staking, proof of stake. And clearly Ethereum proof of stake doesn't have the degree of decentralization and distribution of controls compared to proof of work at the Bitcoin level. And all of that shit is always arguable till the last breath. But this is code, and that's meaningful. And each code, depending on various qualifications, degrees of decentralization, is that a quantification or a qualification? It's probably a little bit of both. Have a different risk profile. Just like you're talking about Ethereum L2s and roll-ups with the multi-sigs. Risk profile, especially as compared to mainnet, which is exactly why when you look at Ethereum mainnet, you have $69 billion, and you go over to Arbitrum, and there's $2 billion, which is basically nothing. And then you go over to Optimism, and you have $600 million, which is literally less than nothing. And it's a negative sum environment. Avalanche at 1.818 bill. The number of dollars on a particular market tells you the trust there is with that particular market. And this tells you everything you need to know. DeFi Llama stablecoins tells you where we are. Armies in the house, much pleasure. How do you manage FOMO emotions? I took FOMO out in the back by the woodshed and shot it. Kill the FOMO. It's imperative. It has no place in any of this. It's beyond management. It needs to die. So shoot it. Run on data. Let time do the work. And remember the rules of the road. I mean, there's a laundry list of rules of the road at this point. It'd be interesting if there was like, a bullet list of rules of the road. But like cash flow above all else, I love fuck you, pay me. That's my favorite rule of the road. Buy at a discount, not at a premium. There's no FOMO. Time will do the work. One of my favorite rules of the road is if one asset's earned 10%, another asset's earned 10%, another asset's earned 10%, they're all earning 10%. Everyone's looking at these assets and like, how do I distinguish between one and the other? And they go into all this narrative. Meanwhile, they're all moving at the similar price points. And you drive yourself nuts with one asset outperforming another asset. One asset up 20%, another asset up 10%. Why? I don't know. They haven't even launched yet, and they're meme coins. And then what does it mean? It means nothing. It means more capital flow to one versus the other, and that's just speculative. That's the odds. That's gambling. And the last thing I am here to do is to gamble. I'm here to own businesses because I've had equities in brokerage accounts, and I'm tired of that bullshit. And these markets have shown me that they are the best investments of any investment that I could find. They fit my criteria of, they fit the most important criteria. You want me to invest in your company? How much are you paying weekly? 0%, but the growth of the stock price, the options, it's going to go up in price. Fuck you, pay me. Fuck you, pay me. You're not going to run your life. You can't run your life. You can't bank your life on the price of something appreciating. You can bank your life on how much money you're going to get on Friday. And when I saw that, that made a lot of sense to me. You can run your life on how much money, if you pull in $2,000 on a Friday, it's a paycheck. And that just is everything to me. We're going to wrap it up in a couple minutes. Let me see if there's any further questions. DeFi futurists, let's run through these. Good one. I go for the ice bath. Ice bath, cold shower, then chill. And that's all you can do. Can you please share your knowledge on inscriptions? So Bitcoin, the Bitcoin network is evolving, as Udi would say. I look forward to where Bitcoin heads. I'm very interested in Bitcoin EVM networks, or EVM secured by Bitcoin hash power, be it stacks, rootstock, or Rolex, even the BitVM, and there's other stuff. There's other optimistic roll-up protocols that are trying to be built on Bitcoin, where Bitcoin is used for the DA, data availability layer, consensus, storage. So my eye is there, but when I saw stacks, particularly stacks and Alex, I don't give a shit about the BRC20s. I don't care about all the crazy PvP shit that goes on with the inscriptions and the BRC20s. I'm not into that. I don't care if they're running numbers. I just don't care. I don't have time for that insanity. I just saw that it wasn't real. It's not ready. So that's exactly why you see Alex, which ran up 1,100%, because it is interesting. It's meaningful tech. It's the stacks DEX. But look at that depreciation from the top. Let's see. It's down 40% of the money. Because right now it's hot air. It's nothing meaningful. It doesn't have the revenue. It doesn't have enough incentive to make the capital deployed to it be sticky. So this is what happens when an asset doesn't have the sticky capital. It's ridiculously volatile. You put 10 grand in there, and you're down 40%, you lost 4 grand. That's how you destroy a portfolio. So clearly that was a premium. Think the premium mattered there, whether you're buying at a premium or a discount. Can't buy at a premium. That's how you destroy a portfolio. So different assets will respond differently to, where how far you come down off the highs. And it should be very interesting what happens with Phantom. Because Phantom really hasn't broken out yet. This is basically a failed breakout of the 100 SMA thus far. Just my eyes are here, but I don't think I have the patience and time to allocate to it versus just sitting in Ethereum. I mean, what are my goals and expectations? If I get a 3x on Ethereum, I'm probably just done for the year. I'm not too interested in hoping for a 5x or 6, 7, 8, 9, 10. I just don't give a shit anymore. I set my expectations so far below the exuberant levels that they become realistic. What's the odds of Bitcoin running to 7 grand? Ethereum running to 7 grand? That would literally be not much higher than previous all-time high. So there is a good chance it runs 200% from here. $7,500. Cool. So if that's my expectation and those are my goals, it's pretty boring goals. Set your goals to be realistic. Hope that helps. Is there a future to it? Yeah, there's a big future to inscriptions and BRC. I don't know about the BRC20 shit, but inscriptions, the concept of metadata or non-fungible special sats and all of that complex conversation around special sats. It drives the Bitcoin maximalists insane. But the concept of an NFT is a big deal. We're talking about metadata storage. It's a big deal with regard to blockchains. That's probably one of the biggest likely things to disrupt. And frankly, that's AWS and Microsoft products, their cloud products. Because that means you have APIs and a capacity to store metadata for users and manage state, mutate state, which is everything for applications. It's decentralized data storage, decentralized databases. It's big tech and can change industry. So whether that's optimal on Bitcoin, I don't know. I'm inclined to think that that's best suited for an EVM layer on top of Bitcoin, which is why I like Rootstock and Rolex. Rolex being an optimistic roll-up on Bitcoin. That's crazy that Stacks has had the attention. The only reason Stacks had the attention is because Alex has BRC20s. That's it. And inscriptions got hot, and that's literally like NFTs on Ethereum in 2020 and 21 getting hot. It's literally bullshit vapor. So, but it does tell us very much what Udi's talking about. And Bitcoin is going to get upgraded, and we're going to start to build things on it and secure things with it, and that's very meaningful. And what's meaningful to me is, great, you have an EVM and it's secured by Bitcoin. Great, we're invested in all these businesses that are EVM businesses. Be it secured by Ethereum, a Cosmos Hub, Solana, or Bitcoin hash rate, doesn't freaking matter. So that's what's so comforting with regard to the businesses that we own and we have chosen, is that they operate on EVM, which can be secured by anything. Army, F you pay me, yes. It keeps things nice and simple, doesn't it? So do you see Bitcoin EVM to connect with ETH-EVM? Sure, EVM goes to EVM. It's exactly what Stargate and Layer 0 do. It's exactly what everything that's going on Cosmos is doing, and it's just everything's going to be cross-chain. That was a 2021 narrative, Twitter post from a while ago. Seamless cross-chain. At some point, you're going to be just executing with an application, and you're not going to know what chain you're on. It's just going to work. I think that's the destination. Phantom community may be dead, but there's still a fair amount of capital on Phantom, and price action looks quite constructive. I don't really care about the community too much. Price action tells me everything I need to know, which means there's opportunity because there's been a lot of capital outflow. That's crazy. that is destruction. Wow, 10% will destroy everything. But I'm very interested. Let's see, not yields. Let's go to DeFi overview. Let's can I not filter DeFi by protocol? By chain? Damn it. All right, maybe not. Yeah, chain, DeFi chain. Is it possible that Cardano has more activity than Phantom? All right, maybe. Yeah, it does. Cardano has 409 mil. It has more capitalization, more dollar liquidity than Phantom. Or maybe that's total value locked, which is not out. No, Cardano has 19.81 million in stables. Phantom has 300 plus million in stables. It's hard to really get a sense of what that all means. But the stable coins is what peers through the bullshit. That's why it means so much. That's why Sui, Sei, and Celestia doesn't have the stable coins. You want to see the amount of stable coins on Cosmos and why almost all the price action is hot air? It's because it's all on Kava, which is a Cosmos hub, and that's 134 million. It's microscopic compared to Optimism. So that's where we are, and that's why this chart peers through the bullshit so meaningfully. This table, this tells us that Cosmos broadly is behind Solana, and Solana is behind Binance Smart Chain, and Binance Smart Chain is behind Ethereum. BSC has a fair amount of liquidity, 5 bill. This is the largest, this has the most liquidity of all the Alt L1s and L2s. I don't know. It is what it is. I have no interest in anything on Binance Smart Chain. Tron is not used for DeFi, really. This is financial payments and settlements in Asia and Southeast Asia. It's pretty crazy what Tron is used for, but it is what it is. So Ethereum is it. That's it. Period. That's where all the money is. Okay. Let's wrap it up. 21 people made it to the end of the stream. I appreciate each and every one of you on this ETF day. Pretty interesting. We will continue to monitor things as always. I think we're in an interesting time of the market. Patience. Be careful buying things at a premium. I mean, hell, you can buy it at a premium if you're okay with corrections. And things may become a discounted price. Just set your expectations reasonably. And the better you set expectations reasonably, the less disappointed you'll be. And that's in the end what everyone wants, is to just feel like they make good choices. So if you set reasonable expectations, you're more likely to feel like you make good choices. Hope that helps. Tell everyone to subscribe. Link in the description to the most rational community in the entire crypto space. I appreciate everyone in there. I'll catch you guys later this week.